What's up, guys? I'm Nobody Special. We got some existing home sales data out today. And I tell you, if we were about to see a housing crash, somebody forgot to tell all the people who are buying houses because this data speaks loudly. Let's get into the numbers. This is on CNBC. This information came out this morning, and we're just going to play some of this video and pause it periodically.
Existing home sales out a few moments ago. Diana Olick's got that for us. Diana?
Carl, existing home sales in July up 2% to a seasonally adjusted annualized rate of 5.99 million units. That's a beat. The street was actually looking for a slight decline to 5.83 million, and June's numbers were revised up slightly, still up 1.5% year over year. Very small gain, but remember, the comps are getting more difficult because last summer was the big spike in home.
So that's interesting, not only in that the numbers came out higher than expected, but they revised last month's numbers. And what she's mentioning there about the comps being so difficult, I want to point to this chart. Now, this is in an article on WBRZ2, which is a radio station, I'm guessing, from somewhere. But I found this chart in here, total existing home sales. And if you look at this chart, here we are at 5.99 million for July, and look at the year ago numbers that we're about to come up against here. Back in July, August, September, October, November last year, we had some really, really ridiculously high home sales coming out of the pandemic last fall that really carried over into the winter. So these year-over-year numbers, they're going to start coming down because, right now we were comparing against over here this dip that we saw last summer during the lockdowns. Well, over the next few months, the comps are going to be going up against what we saw last winter, and last winter was just ridiculous growth. So if we see declining numbers in the months ahead, that doesn't necessarily mean the market is crashing, because I would expect the numbers are going to come in lower in the near future. Let's watch a little bit more here.
Home sales, these are based on closings, so contracts signed in May and June. Sales doing better because inventory is rising. 1.32 million units, up 7% month to month, still down 12% year over year, but that again is a smaller decline than we've seen in recent months.
So that's big. The inventory growth is coming up because we need inventory. If this housing market is going to cool off, the market needs inventory. And, they say the solution to higher prices, or the solution to a shortage, is higher prices. And here you're seeing that played out in real time, right? There was a real shortage of home inventory and prices were rising. And now that prices are rising, you're starting to see more people are making the decision to sell. So these higher prices are attracting more sellers. Now, there is still a ridiculous imbalance of buyers versus sellers. I mean, this is absolutely 100% still a seller's market, and it's going to stay that way for a while. But this inventory ticking up, that's important. We need to see that. If we want a healthy, reasonable housing market and not another bubble, then we need to see that balance and hopefully see it soon, because I think we can all agree that these prices can't keep rising the way they are without the risk of another bubble. Now, if you talk to most people will tell you we're in a housing bubble, which could be the best indicator that there is that we're not in a housing bubble, right? Because when everybody says, oh, prices are going up and they're going to keep going up forever, that's when you know you're in a bubble. The fact that so many people are saying we're in a bubble right now, probably says we're not. But these prices obviously can't keep going up like this.
Still at a 2.6 month supply of homes for sale, a 6-month supply is considered a balanced market between buyers and sellers.
A 2.6 month supply of homes for sale. That is ridiculously low, and that's why I was saying we need more inventory. A healthy housing market has 6 months worth of home sales for sale at any given time. Right now, we have just over 2.5 months of home sales. So we need more homes to enter the market, and it's not going to come in the new build side of things. I can tell you that, because the supply chain shortages are just wreaking havoc with the builders right now, and the labor shortages and people not wanting to come back to work. New home construction is not going to fill this gap. It just isn't. There's too many external supply chain issues, the inflation, the bottleneck at ports, the things going on at China. So it has to come from existing homes.
Prices still rising. $359,900, the median price of a home sold in July. That's up 17.8% year over year. But again, we were seeing gains in the 20% range just a few months ago. But
okay, that's another big point. 17.8% median versus a year ago. Now, you statisticians out there, I want to remind you there's a difference between the median and the mean, right? The mean is the average price of home sales. The median is if you take all the home sales, where are the most sales happening, right? What price range are we seeing the most sales? So like a single $1 million house can't mess up the average if you have 15 people buying houses at 350,000. That's why median is more reliable in this case than the average. And I think you're going to see that even more so because she's going to get to this coming up in the video. Most of these purchases are happening at the higher end of the market.
it's all skewed because of what's selling. Sales of homes priced $250,000 and lower, down 30% year over year.
Sales of homes priced 250%. I'm sorry. Sales of homes priced 250,000 or lower are down 30%. Now, that is not the terrible data point we think it is. All right, that says fewer low-end homes are selling, but that's not really what's happening. What's happening is a home that used to be 249,000 is now 251,000. It's still selling, but it's not in that below 250,000 category anymore because inflation and these home price jumps, it's driving up the price of the homes at the lower end. Now, that does mean it's pricing out a lot of new buyers, but it doesn't mean those same homes aren't still selling. It just means they're selling at a higher price, right? I mean, $250,000 gets you a lot less house now than it did a year ago.
Sales of homes priced $750,000 to $1 million, up 55%. $1 million plus homes, up 59%. So
again, $1 million gets you a lot less house than it did a year ago. So $1 million is still a big, fancy house, but it's not as big and fancy as it used to be. So I think these numbers, you know, the way they're skewing towards the higher priced homes, I don't think that means as much as we think it means because, again, we're seeing a devalued dollar. So a smaller house now goes for $1 million. It's, you know, you do have this trend of flight from the cities, and you do have this trend of upsizing because people are spending more time at home. They're getting that extra bedroom so they can have a home office. More people want swimming pools. More people want recreational rooms. So, yeah, that's going to drive more homes more buyers into the higher end of the market. But I also think that market prices are pushing more modest homes into the higher price range.
again, the second straight month of sales gains, but most of it's happening on the higher end of the market.
So
Chase first.
that tells you one story, right? That tells you the housing market is still red hot. But now you go over here and we see Fox Business talking about a housing market black swan bubbling. So this is a little bit more of the alarmist side. So let's see what they have to say over here.
Tailor-made or one size fits all.
No, we have to watch an ad.
IBM.
Jeez. So, I mean, what they're going to get to in this video is that we're seeing a lot of similarities now to the peak of the market last time around. Here we go. Where's my volume?
Days ago, we found out that home builder sentiment, this is the guy among the folks who build the homes, right? The lowest it's been in more than a year, yet new home construction, even though it slowed a little bit in July, it soared to levels that we've really not seen since the housing market crash, or just before it, 14 years ago. So
that's almost contradictory, right? We're seeing a slowdown in the home builders, and yet there's more homes under construction than there have been since 2007. What's up with that? Well, a home under construction just means we're at some point in the construction process, right? That home could be sitting there nearly completed, and they're just waiting for the stupid light fixtures that are coming over from China that are taking forever to get here. They can't finish and they can't close and deliver on the house until they get that stupid finishing touch in, or the appliances are taking forever to get off the boat. So I think this issue with the new home construction is really being affected by supply chain constraints, and it's artificially inflating the numbers to make it seem like we're overbuilding. I don't think we're overbuilding right now. I really don't. If anything, we're underbuilding because of the labor shortage and because of material prices.
What's the real story here? Jerry Howard is the National Association of Home Builders CEO. Jerry, the sentiment seems to contrast with the reality of home construction going like crazy.
Well, you know what I think, Neil, is that we're really at a tipping point right now where things are either going to continue along strongly or we're going to see a decline. How sharp a decline, how fast a decline, I don't know. But you look at the number, as you pointed out, right now you've got 689,000 units under construction. That's a lot. But you dig a little bit deeper into the numbers and you see that there's 145,000 single family permits that are out there where construction hasn't started.
Okay, that's a big one. You know, over 140,000 permits issued, but construction hasn't started, right? And I know a lot of you folks out there probably knows a builder or two or a contractor. Spend some time talking to those guys. And you're going to find that a lot of these guys, they're waiting for people to come back from work to work. They're swamped. They have more jobs than they just can get to, or they're waiting on supplies. They're waiting on fixtures. So again, this issue with the new homes, it's not demand driven. It's supply driven. And that's important. If you really want to know, has the real estate market topped? Are we about to crash? Then that would be demand. Right? It's demand that makes markets crash. It's when the demand vanishes. And then all of a sudden, all the people are holding the bags on these expensive houses that are no longer as expensive. But the demand is still there. The demand is ripping right now. And the supply is limiting things. So when you've got more demand than you've got supply, that tells me prices, very simply put, prices have more room to run.
And that is a frightening number because that too is the same levels as just before the housing crash 14 years ago. So we're looking at that and we're saying, what's the cause? The cause is simple. The supply chain problems that we're having have led to an incredible inflation in building material costs that are just making things very, very, very difficult. And I'll give you the number. Building material costs overall have gone up 13% already in 2021, where they only went up about 7% the entire year in 2020. So right now, policymakers ought to look at our numbers, look at what the home builders are telling them, and that is we're getting less and less traffic. Costs are too high. Consumers can't afford it.
So there's one thing I want to point out here. A lot of this data in new home construction still doesn't reflect the recent price crash in lumber. All right, all these new homes and, you know, the homes under construction and the new home prices and everything and the number of permit starts, the data doesn't yet reflect the crash in lumber prices that we saw in June, July, August, right? We're still looking at homes that were built in April and May with that April, May lumber with that really high price. There's a delayed effect here. It's going to take a few months for these lower lumber costs to make their way into the new home supply. And the other thing to factor in is that's going to be offset by these other supply chain issues, like I keep talking about, fixtures delays, appliance delays, right? That kind of stuff is going to aggravate what the easing in lumber prices might otherwise alleviate. So I don't know what the aggregate picture looks like. Does the lowering of lumber costs more than offset the issue with the supply chain or not? Only time will tell.
Even though they still have big interest.
But rates are coming down. Real quickly, which wins out?
Yeah, rates are at a decent level right now. They're staying low, but they're being countered by the increase in costs. I've actually had builders tell me, Neil, that they've had to go to customers and give back their earnest money checks saying, I can't tell you I can build this house for you at the price we agreed because my costs are going up so fast, so frequently.
Yikes. All right. Jerry Howard, thanks.
So they kind of touched on there that the key is mortgage rates. All right. And if you've been following my channel for a while, you've probably heard me say that by far the most important factor in whether or not we're in a housing bubble or not is affordability. And I always make the distinction between affordability and price, right? Because one of the things most of us probably didn't notice over the last few years is that the price of an iPhone has skyrocketed. But most of us are still buying that new expensive iPhone because they've worked out this financing and 0% interest. And now the cost of your phone is broken up into the affordable monthly payments that you put on your phone bill. And that has enabled the price of these phones to go through the roof. That's what's happening in housing right now, right? It's not, forget what the house sells for. What is that monthly payment look like for the buyer? That is what determines whether or not the sale happens, right? And as long as these interest rates stay this low, then these monthly payments will be affordable because mortgage interest is the single biggest input into that monthly payment. Now, there's also property taxes and insurance and things like that. And obviously, home price is a factor because the size of the loan dictates the amount of interest. But as of right now, these prices are still affordable. Now, we're starting to see, especially among first-time home buyers, we're starting to see some buyers drop out of the market. And that's good. I guess that's healthy for the market, right? But that's driving them into the rental market. And you're seeing investors who are starved for yield because they can't make any money in the bond market because interest rates are at historical lows. They're being driven into the housing market and they're buying homes, bidding up prices, and then they're renting to someone who would otherwise be a first-time home buyer, and they're paying a higher rent. So right now, these higher prices are still supported because these institutional home buyers can buy the house and they can still rent it at a higher price than the payments on the house are. And because the mortgage rates are lower, people can still afford these higher end homes because the monthly payment is affordable. Now, what killed us the last time around, besides, the complexities of the bond market and the collateralized debt obligations, the underlying thing that killed us in the last the last real estate crash was homes became unaffordable, especially with all of the adjustable rate mortgages. And we had all of these seemingly affordable homes where, only 2% interest for the first year. So everybody went and they leveraged themselves and they bought these big McMansions. And then those teaser rates expired. And Ben Bernanke had, in that year, raised interest rates 4 times. Now their mortgage payment went from $2,000 to $6,000 overnight. Now they can't afford the house. Now it goes on the market as a foreclosure. And that happening all at once drove the prices down. Now, I don't see that happening this time around. So the key is affordability. And if you want to know if we're at the top of the housing market, you watch those interest rates. Watch that benchmark 10-year Treasury bond because that is what determines, that's what all the interest rates are based on. That's what determines if your mortgage rates are going up. That's what determines the affordability. And as long as homes stay affordable, these higher prices are supported. I don't know how long that goes on for. My senses tell me at least until October. I hope to have more information on what I mean by October in the coming days. I'm working on something right now, but I see a lot of these things going on in the market, like moratoriums expiring and stimulus and tapering. And I see a lot of these things starting to converge around October, and it's hard to see past what happens in October. But I can tell you it started with the Fed, and it ends with the Fed. It's not the way a free market is supposed to work. Free markets are not supposed to be determined by the mood swings of central bankers. They're supposed to be determined by hundreds of millions of people acting in their own individual best interests and then real market price discovery based on that. That's how a free market works. That's not what we have. We don't have a free and fair market. We have an oligarchy, a monopoly, almost a monarchy, right? I mean, the central bankers are almost monarchs with how they determine fiscal and monetary policy, but that's a subject for another day. So, guys, that's all I got for you today. So, are we at the top of the housing market? Doesn't look like it just yet. Are we getting a little toppy? Yep, we're starting to see some indicators of a top, but we're still not there. So I hope you enjoyed this video, guys. Please give me a thumbs up, subscribe to my channel, hit that notification bell. Tell all your friends about me. I would love it, and I would be forever in your debt. Till next time, live small and dream big.